Welcome back. You're with us here on Editors Roundtable. We're in conversation with Anish Tawakle, Deputy CIO, Equity at ICICI Prudential Mutual Fund. And we were just talking about cement and what he likes in that space. But let's actually go to the source, which is real estate and construction, Anish. What's your view on that? Because that's like the super important sector with so many linkages. And that sector has been doing very well. And I think an important reason why everything else is also doing well. But where are we in that cycle?
So, Prashant, the way I see it, real estate and particularly volume of activity in real estate is really fundamental to the economic cycle, right? As long as houses are being built, one can be sure that jobs are being created in construction, and then you can also be confident that there will be consumer durables good demand, right? So, the way I see it, what I'd like to see is volume of activity. What would concern me if there was price growth without volumes. That's what went wrong in the 2003 to 8 cycle. You didn't see volume come through, you just saw price increases. At the moment, what we are seeing is both price and volume growth. So I'm still okay, right? But I would expect, what I would like to see is price growth moderating because supply should come on. And if volume growth continues, I'd be fine with it.
Is there any way to, when real estate companies come, we say, what year of the cycle are we in? And these are long cycles, 7-8 years, right?
Yeah.
So usually we get second year, maybe 2 years in, and so there's a long runway still.
See, if you talk about potential, right, it may not actually play out. So I don't want to say I'm confident that this will last 8 years, 10 years, or anything like that, right? But from a potential point of view, right, there is no real constraint. If we get the regulatory environment right, why a real estate construction activity cannot go on for a long period of time. In fact, if you compare India and China, I know a lot of comparisons are made about manufacturing. The real comparison should be on urbanization, right? In 1981, India is a percentage at a slightly higher level of urbanization than China.
Okay.
If you look at the position today, the total population is about the same, but they have 900 million people in urban areas, we have 900 million people in rural areas.
Wow.
Right? That's basically they built housing. When they built housing, then cement followed because their cement consumption went from under 200 million tons to 2.3 billion tons.
Okay.
Iron and steel followed. So actually housing is fundamental and there is a lot of room for it to run provided we create the urban infrastructure, provided we don't let land prices shoot up too much.
Sure.
Prices have to remain low.
Okay. Another space I wanted to talk to you about was autos, because there's lots happening in the electrification of vehicles, right? The government is coming out with a lot of norms to push EVs further. Companies like Tata Motors are putting in 9,000 crores of investment in EV plants. You think that upcycle in the stocks is over, or is there more to go?
So I think, look, I don't think EV necessarily means that the incumbents lose out, right? Because as you said, the EVs are going to be one of the options that the consumer has. There is a fair amount of uncertainty about how much EV this thing will happen. But I think as long as the company has reasonable sort of, bets placed in that space and is developing the technology and the products, it's ultimately volume growth that will matter, not so much the EV versus non-EV.
But do you still like the stocks?
Yeah, we like that.
Okay, all right. Anish, we'll leave it at that. Thank you so much for joining us. And
I hope you come more often.
Oh, my pleasure.
Program. Lovely to have you.
Thank you.
Well, thanks a lot. With that, it's a wrap on this edition of Editors Roundtable. Have a great weekend.